Hey guys, how you doing? This is Tevin from Simple Forex Options. It's an honor to be with you guys today. Uh, okay, it's an honor to be with you guys today for another video. This is going to be our lesson number 8. Um, uh, I don't think I've actually done any lessons this week, so I'm going to try to do another one another one tomorrow. Mainly because me and my wife we've been babysitting. We have been babysitting my nieces, every now and then. So and also just spending time together and stuff. I just haven't really felt like I've felt like making a video. So of course I'll just do it as usual in my own timing, or whenever I feel it's conducive time to do it. Now, mind you, this is lesson number 8, but I'm going to be hitting on something that I had previously hit on before, and this lesson is going to be on moving averages, but it's going to be on a specific setup or type of moving average. I know in the last video I talked about moving averages. I gave my recommendations of certain crossovers or certain support and resistance values that you should use with your moving averages. But today we're going to be talking about moving averages in relation to a rainbow moving average. This is what this was going to be about. Now, some people have indicators to where you can get indicators or templates to where they already have them preset and pre-made. Of course, those ones look much prettier and smoother than the ones that I'm about to show you. But the ones that I'm about to show you they will give you a good outlook on what you should be looking for trading within the Forex market, and also give you a better gauge of what kind of decisions you should or need to be making. Now, with the rainbow moving average, now mind you, I haven't mentioned this, but I had literally just made a video earlier, but because the video was messing up and giving me problems, I had to delete it. And because I had to delete it, I pretty much had to make the video over again. But the good thing for you guys is that that video was pretty long, because I literally sat here and recorded the video and set each one of these moving averages up, going all the way down. So this is extra ones that you guys can see, and this is what they all look like mapped out over the charts. As you guys can see, this is called a rainbow moving average, and you can see how smooth and buttery and nice it looks. Now, there's a couple of them in here that you guys won't see, and it's mainly because I added them in extra over here, and it's the only reason why I added them in is mainly because I felt that there were certain gaps within this rainbow moving average that needed to be filled. So that's why I added these values in on inside of these gaps. So as you guys can see, we have the 2 moving average. All of these are just straight simple moving averages. I'm using them on a 15-minute time frame, and that's one thing that you want to keep in note of, is that when you're using the rainbow moving averages, you always want to use them on a lower time frame than what you expect your expiry to be. So that's one thing to keep in mind too as well. So yeah, as you guys can see, it does have that rainbow look. Now, the reason why I have this light blue line here, this is a 50 simple moving average. The reason why I have it there, because the markets really like to treat the 50 simple moving average like a support resistance area. It likes to bounce off of that, and a lot of times you can rely on trading in the direction of the 50 simple moving average. But also too, it's something to note as well, because that when prices, or when you see them cross, or these yellows or these prices cross over the 50 simple moving average, it could be a nice strong indication of a change of trend direction. So as you guys can see, these are all of the moving averages we have up here. And if you guys don't know how to add them, all you have to do is go click on the price in free stock charts. You press add indicator. After you press add indicator, you press add moving average. You see how one of them just popped up on the screen. You go down here, this is the one that just popped up. All you want to do is click on that. You click edit, and you guys really can't see it from here. So let me squeeze the screen in just a tad bit. Okay, all right. So yeah, all you want to do is click on edit, bam, and this is what we're looking at right here. And all you want to do is you can change the color to whatever you desire. So since on the lighter ends I have this around there, and you want to put it let's say the last one I have it all the way up until 100 and 100. Yeah, so I say you could put one at 110 or something like that, something that's like really on the outskirts, or you could put 105. You really want them to be very close to each other, to it almost hugging each other. I just added the extras. It doesn't really matter. But the purpose of the rainbow moving average is really, one, to let you know in which direction the trend is inevitably going, so that you know which way you need to be trading or what kind of decisions you need to be making. Also, two, is very significant for giving you legitimate trend crossovers. So it would allow you to see when a trend is crossing over and when you need to be looking to either get out on a trade, or when you need to be looking for a crossover opportunity for it to go in a complete other direction. Prime example, if you guys look right here, you see that the moving average smooths its way into a downtrend. It breaks out of this very last line, which is that 110 moving average, which once it gets down in these areas, if it doesn't bounce and go back up, you could kind of, especially when it's spread out, you can kind of rely that it's probably going to, give you a nice little crossover. If you got in somewhere around here and you expired somewhere down here or a couple candles down, of course you'll be profit or ITM, whatever you're using. But when you see that crossover, that's a good sign that, things are going to cross over. But let's say you see things in, you see how it looks smooth. It's a smooth, nice downtrend. It looks very pretty over here. And what you guys will notice is right here, you see how all of the prices gets really tight and they begin to, it's crazy because that's cool. Like, free stocks charts actually shows you where each moving average is. Well, that doesn't matter. But you could use these margins like the purple. I never thought about this because I never paid attention to these values before. But if you guys see the teal at the very bottom, if you see the purple and you can see the light blue, those can possibly use as support and resistance areas. It's a possibility. I'm not saying you should do that, but it's a possibility. But yeah, the point is that when you see this crossover, the prices begin to consolidate and get really tight. Now, right here, you can see a bunch of noise and stuff that's going on, but you'll notice that right here is when prices literally scrunch up into like a little ball, or they scrunch up into like a little, like it's almost like something is squeezing them together. When you see prices begin to contract like that, like something is squeezing them together, it's a strong indication that the markets is about to change directions and go in the uptrend. This is why this is so significant, because it allows you to, it almost working like a momentum almost. It allows you to catch, those oscillations before they even take place. Because if you're looking somewhere around here and you see that the prices are very tight and they're becoming very drawn together to where you can barely even recognize the individualistic colors anymore, you could have probably gotten in on this nice little spike up close to before it even happened, or even look for an opportunity close before it even happened. Now, the most important rule on the rainbow moving average, which is why it's so important, the most important rule is you only trade in the direction of the moving averages. You never go against them. So for example, now you can, if you have a certain strategy set in place, like a retracement strategy, because sometimes people get in on trend buybacks, which means they get in on trend retracements. I don't mind that, but you have to make sure that your expiry is on point or closer, or that your profit is very small. It's a small margin. But if you look right here, you'll notice that every time that the yellow moving averages, which is the lower ones, every time that they are out here by themselves and singled out alone, you will notice that they don't stay there long. They kind of want to stay within the orange and the red zones, and they'll usually bounce and ride off of those orange and red zones until it starts to get more into more critical areas. The point that I'm making is that if you see stuff like this, these are not buy options that you want to be looking for. So if you have something that's giving you a signal, right? And let's say that it gives you a signal somewhere around this area, right? It says there's a new trend about to start. You get a signal around this area. You're like, oh man, let me go in and get in on the call option around this area. But then you notice that all of these yellow moving averages or the lower moving averages are out here by themselves. They are not actually at a retracement level. And because they're not at a retracement level, it's a strong indication that they'll come back down and then go back up. So as you guys can see, this pattern is happening all over the place. So if you were to look down here, you see that bam, it's out here by itself and it's still going down, and then it bounces up and then it bounces back down, bounces up, bounces back down. It's treating these moving averages, these critical moving average areas, it's treating them like support and resistances. Now, it would be very good for you as well if you actually had a support and resistances set up on your chart. And I think you should refer to my video of which lesson is it? Lesson number 6, where I actually talk about support and resistances and how you should set them up on higher time frames. I think that would be very, very helpful for somebody who wants to add the rainbow moving average to their system. Now, mind you, you guys didn't see the video before, but it took me about 20 minutes to set every last one of these up, mainly because I had to set them up and then I had to choose the colors. And the way that you want to set them up is that you want to get at least 4 to 5 each within the same color range, and you want those ones to be closer and tighter together when it comes to the the moving average periods. So for example, we have 2, 4, 6, 8. As you guys see, I went in 2s, but then I skipped I have a 10 over here that you got 10 and a 22 that you guys can't see because I added it in there to kind of fill up a gap. But as you guys can see, I have a 10, but the 10 is orange, and then I have a 14, I have an 18, I have a 20, then I have a 22. The 22 is orange as well. And then we go on to 24, 26, 28, 30. As you guys can see, I'm just moving up in 2s, Now, a lot of people really just do it with one period up, and you just keep going. And I don't have a problem with that. I would recommend that too as well. So yeah, you want to do just 2s. And then when I started to get a little bit further, I kind of started to stretch them out a little bit, mainly because those are the more critical areas, and the markets respond more. They respond more binary to those. It's just like a true or false thing. It's either going to break out or it's going to bounce off. It's usually like either or with those. So I have 36, 38, then I have 40, then I have 46, which means I skipped 6. I didn't do it with 2s anymore. And then I went up to 50, and then I went up to 55, then I went up to 60, and now I'm going by 5s, as you guys can see when I get into higher ranges. So it's 65, and then I have 70, and of course I added in 33 to kind of fill a gap. And I added in a 43 to kind of fill a gap. So it's 40 between the 43 and 46. And, these are added in. Then I go up to 75, 80, 85, 90, 95, 100. And then as you guys saw, I just added on 105. So that's one thing to note. In the yellow areas, you do not want to buy. You do not want to, you don't want to buy in those areas. And in these areas right here, you don't want to sell in those areas. You want to wait for a pullback. You wanted to come back within these critical areas where they hit the orange. They respond most to the orange, but they respond very critically to the light blue line. At 50 simple moving average responds very critically to that. But yeah, they respond very, very well to the orange, and they also respond to the red as well. The most often, those are the two ones that they respond to. The reason why also too as well, it all depends on your expiry. If you're doing like kind of short 30-minute expiries, you can get in on a pullback like this and still come ITM and get some profit on a retracement. Like all of these are just simply trend retracements, but you can see them much better because we have this in place. For example, some people see stuff like these little spike downs right here. They see a strong spike down, and let's say even if you have a Bollinger Band, if it's on the outside of the Bollinger Band, most people would just get in on the call because they're assuming it's going to automatically bounce back up, which could be the case. But what you want to do is look for an opportunity to get in on these retracement areas or these very critical areas where the markets are pivoting or retracing out of. And like I said, you can use them with support and resistances as well. Now, another thing to note as well is if you see that prices look something like this, like if you see like stuff that's very noisy like this, you can't really trade that. I mean, if you look at it, it doesn't look smooth. It doesn't look clean. You can't see the individual moving averages. As you guys can see, these are going like a smooth little wave almost. But when you get right here, it's very noisy, very messy. that means that around this time you can't trade those markets because there's no legitimate decision that you can actually make. You don't know if the market is fully in a downtrend, even though it's still crossed over. You don't know if it's fully there, or you don't know if it's or in the uptrend. It's really just a point of consolidation, and the purpose of these is to expose those false ranging markets that are going sideways, but then also to expose those markets that are actually in the trend, and you may not notice that they're in the trend. So if you see stuff like this, these are actually trending markets. Even though it's ranging and going side to side, it's still slowly going down, and you could have actually found some opportunities with that. So it's another thing too as well. Like you want to, if we were to go back, let me see if I can find you guys some more opportunities. As you guys can see, very smooth. You see it bounces off the orange, goes up, bounces off the orange, goes up, bounces off the orange, goes up. It does the same thing majority of the time. It's a very, very good look. So that's just something to keep in mind. You want it to look smooth. You want it to look clean. You want it to look crisp. And also, too, you guys might be able to get an overall look of the markets. Now, I would suggest of course, you need to use this as an add-on to your system. It doesn't need to be your main thing. But I would suggest that if you are one of those traders who like to trade higher moving averages like 180s, 360s, 200s, 250s, I would suggest you base this whole system off of those moving averages. You want those moving averages to be the very last things in line so that it can give you a better gauge of where the market's at based off of your own system or how you do things. Mainly because it'll help you make it, just inevitably it'll help you make much better decisions when you're able to keep your trades in a much cleaner way, if that makes sense. So yeah, this is good use for it. So as you guys see, retracement, 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 retracement. And I think there's something else that I'm mixing I'm supposed to explain, because I talked to you guys about the yellow part. You're not supposed to trade in those. I'm also talked to you guys about the smooth. You want that smooth, clean look. That's how you know it's fully an uptrend. When you start seeing crosses down below that 50 simple moving average, or between that 50 moving average, which is this light blue line, that's how you know it's probably going to be a trend direction change. Also, too, you don't want to mess with crumpy or messed up areas. What else? Also, too, yep, the crossover, when you see prices contract like this, like they almost bend and tighten together, it's usually a strong indication of a trend change. What else? Oh, also, too, these inlines, you may not see it right now, but these inlines can also be used as support and resistances areas. So there are occasions that prices actually tend to bounce off of those, and like the price reaches down, it bounces off of those and goes back up. And it could potentially treat it like it treats these things over here. So that's something to keep in mind too, because it's very possible that that actually could happen. Now, I would say also too as well. Oh yeah, like I said before, you want to use these with support and resistances. Refer to my lesson number 6 video for support and resistances, because this can be used very well with those support and resistances. And I think that's about it. I feel like I'm missing something because I had already made a full video explaining all of this, and I feel like I'm actually missing something. So support resistance. Never worried about that. Well, if I remember it, I'll probably just try to let you guys know in another video or something like that. I can't think of it right now. I did mention too as well, if I'm not mistaken, that you want to use these on a lower time frame than what your expiry or trading is. So if you are trading hourly expiries, you want to be looking for these on a 15 to 10 5-minute time frame. If you are trading daily expiries, you want to look at these for an hourly time frame or 4-hour time frame, and so on. So you want to try to be at least 2 time frames under what you are actually trading. So if you're doing 4 hours, you want to at least have these on 30-minute charts, 15-minute charts, something like that, of that nature. So yeah, I think that's everything. I don't think it's everything, but then I do think it's everything, because I can't think of anything that I actually have to explain, even though I feel like I'm missing something. But hey, like I tell you guys, this is a powerful. It's not a indicator. You actually make this yourself with just a bunch of moving averages. But some people do have indicators to where they actually come ready. You can get them from them. Just search the rep for it, and you might be able to find it for your platform like MT4 or something like that. But this is a very, very beautiful and useful indicator. It's really there for to give you a full gauge of the markets. Also, too, it work well with stochastics as well. As you guys know, I made a video on stochastics, so I would suggest checking that out to see how you could couple it together with the system. Also, with the CCI, I put a strategy in there. You can watch it with the CCI and see how you could couple it together with the system. But as you guys can see, naturally, you can just look at this and you can just kind of tell the patterns, and it's so much easier to see, and you can kind of see what's going on with the markets, what's going to happen. Maybe when it starts slowing down, when the markets are ready or starting to reverse, you get a gauge of this stuff before it really happens. Like you kind of get a good like idea, because as you guys can see, you see how the oranges and the yellows begin to squinch down into the prices. This is usually signs that the trend is about to change, even though it hadn't actually fully happened yet. You see it crosses over this moving average, but you started seeing signs of it a little bit early, like the jumbled up and all that kind of stuff. So for you, you're like, okay, the trend is about to change a little bit, you know, because the oranges and the red, they're collapsing, purple is collapsing. So then everything starts to collapse. Then you'll be able to say, okay, things is about to change a little bit, and I want to be able to make opportunity and getting in on those. So, all right, hope you guys enjoyed the video. Hope you guys learned much. If you, like I said in every video, if you have any suggestions of any videos you would like me to make, please refer to the comment section and let me know any indicators that you would like me to talk about or make. These are just purely indicator classes, so if you certain indicator you want me to talk about, review, or talk about how I have used it, then I would suggest doing that. Me personally, I have these on my charts. I've had them on my charts for a little while, and I love them. They really, really help me to make good, solid decisions. So they've been proven to be very useful. Of course, I have them in a different time frame, but I had them on a 15-minute too at one point. So, all right, guys. Hope you guys enjoy. Stay vigilant in your trading. Please make good decisions, and deuces.